Google stock is dropping in the after hours. Is it cause for concern or is it cause for a buying the dip opportunity? We'll talk about that and more on today's show. What is going on, investors? Hopefully, guys are doing well out there. Time to really get earnings season underway as we talk about Google. They have two classes of shares, GOOG and GOOGL. For the most part, it doesn't really matter. Over the last year, shares of the GOOG shares up about 56% year to date, off to a really nice start, up about 8.6%. But we are seeing, after the company reported their Q4 earnings, after the bell, shares of the search engine giant off about 4%, maybe upwards of 5%. Talk about what this means from a technical perspective. Is this the start of a reversal pattern, a double top, and lower prices for Google? We'll talk about that from a technical perspective. But we got to jump into these Q4 earnings. I tell you what, anybody who got laid off by Google certainly over the last year, the company just did another round of kind of smaller layoffs just more recently over the past couple of weeks. If you got laid off, you're looking at these results, wondering why and how. As the company beat by over $1 billion on the revenue side, they also beat on the EPS side. They had revenue coming in at $86.31 billion. That was 13.5% growth year over year. Now, the company divides their business unit up into different segments. You have Google Search, more or less your search advertising business, $42.6 billion, all the way up over $48 billion. Now, keep in mind, this was Q4. Q4 is the biggest quarter for Google. You see the expectations from Wall Street coming in at about $85 billion. High-end estimate was closer to about $87 billion. Google coming in at that $86.3 billion. So over the expectations, not quite all the way up to the high-end expectations. But what you'll notice is in Q1, Q2, Q3, advertisers pull back on their spending because obviously there's a lot of advertising that goes on in the holiday season. Q1, for example, Wall Street expecting, and I say just, $78 billion worth of revenue. Now, what's really humming along is here on YouTube. You guys must be watching a lot of ads because $7.9 billion, almost $8 billion in revenue, all the way up to $9.2 billion. Tell you what, YouTube's on a run rate that is actually maybe exceeding Netflix in terms of revenue. Then you have your Google network. These are all your websites that have different types of AdSense. You did see a little slippage there from 8.5 down to about $8.3 billion. Could be some privacy things. Also could be AI, just a less network traffic going onto the individual website when you have things like ChatGPT delivering content, delivering answers for you in the same window. Obviously, a challenge that Google will have to overcome in the era of AI. Google advertising, though, looking really good from about $59 billion all the way up to $65.5. So you grew that about $6.5 billion just over the last year on a quarterly basis. Now, the company used to call this next segment Google Other, but they are now labeling it Google Subscriptions, Platforms, and Devices. So it will include things like your Pixel phone, which are relatively popular for the non-Apple out there, other platforms that the company operates under, and also subscriptions, primarily probably YouTube TV and NFL Sunday Ticket, those types of subscriptions. Big boost here from about 8.8 all the way up to nearly $10.8 billion. Big boost there. And then finally, the all-important cloud. This is probably dragging the results down a little bit. Wall Street probably expecting a little bit better growth than this. 7.3 up to 9.2 on the Google Cloud. Now, they also give you operating income for all the segments. Obviously, your services business, which is primarily advertising, went from 20 all the way up to 26.7 billion. The Google Cloud business more recently turned profitable. It was losing money last year, now churning about $864 million worth of operating income off the $9.2 billion worth of revenue. So I think what investors are starting to realize is this Google Cloud business has far more competition than even YouTube and certainly Google Search. And so the profit margins in those businesses going to outseed Google Cloud. It'll be interesting to see if you could have margin expansion from Google in the cloud business with Amazon, with Microsoft, with Oracle and IBM and all the other kind of smaller players out there as it relates to cloud. Can you expand over these? These are literally single digit operating margins. Certainly a question that investors and many people will have in the coming years ahead. My guess is Google will figure out a way to do that. They have these other bets as well. Nice improvement on the operating losses there, as you did see some acceleration in the other bet revenue. My guess is maybe Waymo contributing to that, as anytime I'm in San Francisco, I see a fair amount of those cars rolling around the streets. Now, over to the balance sheet over at Google, you're going to wonder why the stock is going down, because it really doesn't get a whole lot better than this balance sheet. And that's for all the major tech stocks. Other stocks like Microsoft and Apple have kind of leveraged up their balance sheet. Not really Google, okay? So they got about $11 billion worth of cash. It's almost the same. They've shaved off about $2.5 billion from last year. They don't really have a lot of long-term debt. On Apple's balance sheet, it's almost dollar for dollar cash versus debt. Over at Google, they're just sitting on this like Mountain View pile of cash, and we'll see what they decide to do with it at some point. Here we get a better view of the statement of income. They break it out, obviously, from the different segments, but here it is, kind of a company-wide perspective. That $86.3 billion worth of revenue, which we talked about, was 13.5% growth, and it was above expectations by about 1.5 points, we'll call it, over the last year. The company has been in what we would say cost savings mode, and we're seeing it in R&D. They're still spending a fair amount, right? You ticked up about $1.9 billion on that, but your sales and marketing didn't budge a whole lot, and your general administrative just ticked up marginally. So your total costs and expenses over at Google went from, we'll call that 58 up to $62.6 billion, giving you strong nearly $24 billion worth of income from operation. Again, this is not for the full year. For the full year, you had $84 billion worth of operating income. Bottom line, you're looking at about $20 billion worth of net income for a quarter. Again, most companies aren't even worth $20 billion. This company generates that in net income in obviously its best quarter, but in a single quarter. From a cash flow perspective, off a little bit. This could have some investors concerned a little bit. Most of it looks like, to me, you had some changes, I believe, in how income taxes are recognized by companies. I noticed a large charge here. I think that impacted your cash flows, because when you look at your normally kind of your large line items, you have your depreciation. That line was about the same. Your stock-based compensation, that line was actually a little bit more. Should help your cash flows even better, but you did have this big income tax charge, also more on the accounts receivable side as well. So it hurts your cash flows from 23.6 down to, we'll call that about $19 billion. Nothing to really sweat, considering for the full year, the company had operating cash flows of $101 billion. You're probably wondering, well, what the heck does Google spend all that money on? I did see a slight acceleration on purchase of property, plant, and equipment. So you could have some more data centers as it relates to AI and some of the chip making that the company does. I noticed an acceleration there from 7.6 up to 11. For the full year, you can't really see it. It's basically flat on that property, plant, and equipment side. But in the most recent quarter, you did have an acceleration there. And then obviously the company is buying back shares and marginally kind of repaying debt as well. That's basically what the company uses its cash for. And certainly in this regulatory environment, that's about all it can use its cash for. I tell you what, you get a change in the regulatory pressures in Washington, D.C., and a company like this could go on an absolute buying spree. Unfortunately for these companies, I don't think either candidate that are popular in both parties have any interest in handing out any wins from a regulatory perspective to big tech. Now, moving over to technical segment, there are going to be some people that are alarmed by the fact you came up here to all-time highs at Google at about $150 per share, and you straight up got rejected. Some are going to point to potentially maybe a double top formation that would likely lead to, from a technical perspective, pretty big drawdown for Google. Right now, you are simply back testing to the top of the channel that we've kind of been floating in. I don't think I have this line drawn in there super accurately, but we're more or less coming back here and back testing this line. An reinsertion into this channel, which I'll clean up here a little bit and maybe change that to a green line. A re-entry, if you will, back into this channel. And if you want to buy Google shares based on the fact that they have all this operating cash flow and the company seems to be doing relatively well, at least from a financial perspective, your first opportunity to buy is usually about at the middle of the channel. I like to buy or start buying at the middle of these channels because, as you can see just in this channel, and you can pull up many channels of many stocks, they don't always get all the way to the bottom. For example, this channel has been intact since May of 2023, and we've only touched down intraday even twice. And so unless you're sitting around your computer constantly monitoring the price of Google shares, you would have had maybe a few hours to buy the shares at the bottom of this channel. That's why I don't mind starting a position. Let's say I wanted 10 shares of Google. I'm starting to buy like 2 or 3 shares here. If it happens in the shorter run, about $135. Post market, we're sitting at about $145. Another $10 pullback on Google would probably signal a buying opportunity. As the stock continues to work its way down, we get one of these moments where we hit the bottom of the channel. This is when you be a little bit more aggressive on your buys. Again, you bought 2 or 3 shares up here. Maybe you bought 4 or 5 or 6 shares here. Then you get your rebound. You can kind of buy them back on the uptrend. Conservative investors that don't want to see themselves, having a big drawdown, and you've had these big drawdowns with Google. The past big drawdown took us from 150 all the way down to 85. It's nearly a 50% drawdown. You want to protect yourself from that type of drawdown. You put stop losses underneath the previous lows, which are at 120. So you're buying between, we'll call it 120 and 135, and you're getting stopped out at about $120 per share. The upside is you find footing here, you find investors, the sellers dry up, and you push up over all-time highs back into the 160s, 170s, maybe even 180s on Google's to the upside. Nothing in these financials are overly concerning. Cash flows, balance sheet, operating cash flows, operating income, net income. It all looks great. I think the question we have with Google is, as we move into an era of AI where our search queries don't necessarily have us clicking on ads, and the information that we desire is simply delivered in screen and on screen with maybe less ability to click on ads, how will Google's search business, which is currently a $48 billion per quarter juggernaut, handle that? And on top of that, will the advertising here on YouTube be able to continue to grow if the search business hits some roadblocks? We'll certainly be here to cover it for you. I still think it's too early to really make a definitive decision on that. In the meantime, Google's financially healthy enough to have plenty of time to figure it out. Hopefully, you guys enjoyed today's video. Obviously, be back with more, and good luck with your investments.